Welcome. I am the FX Savant, and as you can tell by the lights, we have another episode of Confessions of a Trader. I think we are on episode 5, I do believe. And in this video, I want to speak about bad trading habits versus good trading habits. This is going to be a good one. Drop me a thumbs up, comment, subscribe, and let's get into the video. Some of these you may know you possess, but you may not know the detriment to what they're doing to your trading career. Any of these habits, whether good or bad, are going to produce their respective results, especially over a long term. Some of these habits may be hard to break, which could be detrimental to your trading. But nevertheless, let's go over them. Bad habits. What are some bad habits? Well, I think the number one bad habit is overtrading. Yes, I said it. Overtrading, trading too much. You're taking 2, 3, 4, 5 trades a day. I don't think that's necessary. It's not a high probability to produce a long-term success. The more you're in the market, the more opportunity you have to lose. So it's a risky environment. Yes, there's capital at risk. You can lose. And the more that you are in the market, the more opportunities you have to lose. So overtrading is probably the number one bad habit for traders out there. And if you have this, a simple way to combat this would be take one trade a day. If you can do that, just try to find one good trade a day, whether it wins or loses, you're off the charts. That will help you to see how important really focusing in on a trading setup can be, which will lead us into part number 2, adding to losers. What I mean by this is if you get a position and it starts to go against you a little bit, you're in a little bit of drawdown, but you may have entered into a position on an impulse candle where you didn't really get in on structure. So the pullback, the retracement, you may think, all right, I could get a better position, could set me up for a better risk to reward. I could get in a little, if you're buying, I could get in a little lower than what I originally entered in with my stop loss and everything like that and have a bigger take profit. But what that is doing is you're jumping in when you're already losing. So you're adding to losing positions, which is never good. You don't want to open multiple risks. So you don't want to stack positions unless you're able to go risk free on one of those positions before you enter into another one. All this is doing is fulfilling your emotion to get into a trade, to your excitement in the market for the moment. But overall, the trade idea obviously isn't going according to plan. You're in drawdown, you're losing money. You don't want to see that, and you don't want to get into the market when you're losing, especially for the opposite direction, which leads us into number 3. Bad trading habit number 3 that I see a lot of traders having is over leveraging. This is a marathon, not a sprint. I know it sounds cliche, but this is a long-term thing. Trading is forever. I tell everyone, once you get introduced to trading, to the trading world, there's so many instruments. There's cryptos, there's indices, there's commodities, there's currencies, there's everything under the sun that you can trade if you have an interest in it, and what the market can provide is enough for any person to continue doing it for the entirety of the rest of their life. So the entirety of your life. So the rest of your life, rest of my life, I know I'll be trading because of what I can get from it and what it's given to me and person has turned me into. So I know that regardless what happens today, if I win a trade, lose a trade, don't take a trade, there will always be another trade. So there's no reason for me to over leverage on one single position, basically put all my eggs in one basket for one trade just in the moment, and the market's not certain. So just because it looks like a good setup, yes, it could match all the bells and whistles, it checks off all the boxes for my strategy, for my rules and everything, and it could still be a loser. So knowing that, as well as knowing that I'm going to have to take another trade regardless whether this one wins or loses, keeps me grounded and level-headed, keeps me from being greedy in the market. We all know that greed will get you bit in the butt and it will get your account blown. If you can not blow an account, you'll end up making money. So if you can keep your account for a long period of time, eventually it will stop losing money and start growing money, because you'll start to learn, you start to understand and do everything. But don't put all your eggs in one basket for one trade. You're gonna have to make another one whether that trade wins or loses anyway. So you don't want to build that bad habit. So those are my top 3 bad habits: over trading, adding to losers, and over leveraging. So now let's go over some good trading habits. These are basically the opposite of those in my eyes. So number 1 good trading habit, or number 1 thing a trader notices when they become better, when they see themselves getting better. Here's one thing that I noticed about myself was that I was taking less trades. So I went from taking 5 trades every day, every week, just trying to get in and trying to trade, to taking maybe 3 trades a week. And I started to realize that the less trades I took, because I was focusing on the setups and getting getting good quality setups, I was winning more than I was when I was taking 50 trades a week. So if I was taking 5 trades a week, I would end up making more than I would if I was to take 20 trades a week. And that's one thing that made me realize, all right, it's not about the volume, it's about the quality. So good traders understand that good setups is the only thing that they look for in the market. Good trading habit number 2 is that traders are emotionless. So not saying that you don't enjoy doing what you're doing, it's not fun anymore, you don't get any excitement from it, but it doesn't evoke any emotions from you. Your trading doesn't cause you to feel stressed out, doesn't cause you to feel angry, doesn't cause you to feel happiness, doesn't cause you to feel joy or sadness. Once you become emotionless to the market, yes, I enjoy the market, I like trading, I like everything about it, but when I place a trade, I don't have a fear of, oh, if this one loses, then or oh, if this one wins, yes, I'll have this amount. No, it's simple to me that, hey, here's a trade set up that I see, it's fitting my rules, let's take the trade. The outcome is, I know both outcomes. I know all the outcomes. I can either lose this trade, I can either win this trade, or I can get out of this trade for no gain or no loss. I'll get out break even. I know those are my 3 results, which keeps my emotions in check because I know what the parameters is. I know how much I'm winning, I know how much I'm losing, and I know it's the same and consistent over and over and over and over. So I don't have any emotion whether a trade is 1 pip away from my stop loss or 1 pip away from my take profit, which will bring us to point number 3, is that traders wait for their setups. You might have heard this before, track your trades. But what I mean is to stalk your trades, stalk them before you get in. So really follow the market, kind of set up where you would like to see the market go and the things that you would like to see it do. And then once the market is following that path, then yes, you're understanding the market, you're in tune with it, you can see how it's flowing, and you can probably predict that if it did what you wanted it to do beforehand, that by the time you take your trade, it's going to continue doing your trade setup. It's going to continue doing what you think that the market's going to do. So if you're waiting for a pullback to get short, waiting for the market to correct itself to come to the 618 Fibonacci retracement zone, and then you want to see it get a little rejection, and then you want to get short from there and target the lows. If you see that after the impulse, it starts to retrace slowly, and then it comes exactly to the 618, you get a rejection wick, you get some type of confirmation that the market is not want to go higher than the 618 retracement, and then market starts to roll over, then yes, that's a good setup. You've stalked that trade, you've seen it, you've identified what you wanted to see the market do, or that instrument or currency that you've seen exactly what you wanted it to do before you got in. And the fact that it did exactly what you wanted it to do before you got in will most likely mean that it's going to continue to do what you want it to do after you get in. You're tracking the market, you're in tune with it. So they're waiting for their setups. They're not just waking up in the morning or just coming to the charts after not looking at them and saying, oh, hey, this candle looks like this right now, let me get in, let me see this. No, good traders are actually waiting for their setups and taking their setups regardless of what else they have going on. If they're in drawdown or they're on a losing streak, they still take the good setups. They still take the same setups over and over and over and over. If they're on a winning streak, they still take the same setups or negate setups that don't fit all their rules. They don't just jump into any trades blindly or emotional. They don't just jump into trades just off a whim. They actually sit back, prepare, plan, and wait for the setup that they're wanting to see. But yeah, don't want to make this too long. Once again, just going over some quick things. These are a few things that I see and that I've noticed within myself and other traders as well. Some of the things that are hurting your trading are over trading, adding to your losers, and over leveraging. These are all detrimental things to your account and will blow your account quickly. And on the vice versa, the opposite of those good things, the good trading habits that are opposite of those bad trading habits would be things like taking less trades, would be not having any emotion when you're trading or when you place a trade or while you're in a trade, not having that revenge factor. If you lose a trade, you want to immediately get back into another trade just because you lost a trade. Being able to lose a trade and not take another trade or leave the market for 24 hours or 48 hours or however long is a good trait within itself. It's a good habit within itself. Not a lot of people can do that. And then after that is waiting for your best setups, waiting for your setups, following your rules and strategy to a T. So strictly, that's it. I just wanted to go over a few things that I've noticed that could probably help you if you are experiencing some of these things, and a way to correct the bad habits if you do possess those right now. now. But other than that, make sure you drop a thumbs up if you do enjoy these types of videos, this type of contents, the Confessions of a Trader episodes, where I give you the psychology aspect of trading, not so much as just the technical aspect. Drop a comment in the comment section if you'd like to tell me something, or if there was a video you'd like me to do or go over. I'd be more than happy to do that for you. And make sure you are subscribed. So click that subscribe button. Come on, actually do me a favor. My barber said if I get a certain amount of subscribers, he'll give me a free haircut. So let's get me a free haircut. Yeah, that's it, man. I hope you're having a profitable day on and off the charts. And until next time, I'll holla at you.